As we can see, the markets are opening on a negative note this morning. No surprises there with the Asian shares all tracking lower, concerns around the death of Kim Jong-il, and also, of course, the credit downgrades, possible credit downgrades to Euro states. I think that's really what's defining this gloomy mood on this Monday morning.
Yes, I would agree with that. And traditionally, one actually sees quite a strong December on the back of light volumes, people in the festive mood, trying to end the year on a high. And with all these negative news stories we have seen this year, December might turn out not to be as good as previous Decembers in other years.
Interesting, though, that volumes on the JSE last week were quite strong. We had 371 million shares changing hands, and that's well above the 200-day moving average. Anything to take from that increase in volumes?
Well, the futures closeout on Thursday was probably the main reason, but then also on the same day we had the news out of Old Mutual selling their Nordic Scandia operations, and that gave a big boost to their volumes and through that to the whole market volumes as well, yes.
So nothing apart from those two pieces of news, because obviously, you know, December is expected to be light trading, and we could see some wild price swings going into next week or, you know, starting this week.
We could, and especially these days, it seems like what has happened in the US in terms of trading short-term strategies, risk on, risk off, one day up, one day down, is starting to affect our market as well. So if you look at companies individually, there's a lot of value and valuations are at reasonable levels. But if you look at the whole market and the way it's trading, it seems like traders have shortened their horizons, their investment horizons, and that leads to more volatility and more days that are up and then the next down. And in the short term, that means even harder to call markets.
And of course, if you are keeping your eye on the markets and do have some trading ranges there, good opportunity to get some stocks on the cheap, perhaps, if we are seeing these wild price swings. So let's look at Old Mutual. The stock bouncing some 12% last week. Really, investors liking the news that it's selling off its Scandinavian unit, going to net around £2.1 billion. That's $3.3 billion. Just another material step in its restructuring program, and investors liking this news.
Yes, liking it very much, and probably on the expectation that there could be a release of capital to shareholders. So of the just over £2 billion that they are getting in, they'll use some of that to decrease debt, but there'll still be a lot left. And the question is, will it be a special dividend? Could it be a share buyback? Old Mutual is the stock on our local stock exchange with the most shareholders. They have over 500,000 shareholders, so that leads to a high cost in terms of administration, sending out circulars, sending out annual reports. And if they could choose exactly what they wanted to do with that money, they would probably choose a special share buyback, a odd lot offer, to clean up the base and buy back most of these small shareholders as shares. But that has got some political repercussions as well, because the JSE wants to have a large participation of the public in the market.
Yeah.
So at this point in time, it will probably be a special dividend rather than a share buyback.
A contentious issue there, I'm sure, between the JSE and Old Mutual. Staying in the financial front, just news flow this morning is that Investec has got the go-ahead from the UK FSA to buy out Evolution, just confirming that they're going to increase their exposure to the UK market through this asset management company. Overall, do you like where Investec is going in terms of increasing its exposure in the UK?
I do like it, because even though they are increasing their exposure to the UK, which has seen some strain, there's also a difference between the more regulated retail banking operations and then asset management, which is a lightly regulated market. So if you look at regulations that are being proposed in the UK at the moment, retail banks will be ring-fenced, and if you do business within that fence, you will have very low leverage, you'll have very high capital requirements, and banks will therefore be less profitable, have lower ROEs if they are in retail operations. What Investec is doing very well is they're expanding outside of retail to things like asset management, which has less requirement in terms of capital, which they could get a higher ROE, which means higher returns to shareholders. So I support the strategy they're embarking on.
Of course, there's going to be a loss in positions there. The headcount will be reduced, but that's, I suppose, that's part and parcel of a merger taking place.
And especially in the UK financial sector, where we've seen the big banks shedding a lot of jobs. So there will be some job losses, but not to the same extent as some of the big investment banks that are shedding thousands of jobs.
Tough market to be operating in the UK at this point in time. Bringing it back home to South Africa, let's just take a look at the banking sector as a whole. Are you a bank bull or bear as we go into 2012?
Well, I'm probably somewhere in the middle, but I'm closer to a bear scenario than a bull scenario, where we've seen in the last year the share price is just tracking sideways, and that is probably also of the a reflection of the fundamentals of the banks trading sideways because of a lack of growth in their lending books. And 2012 could be more of the same, where there's not a lot of growth in lending. That means the costs still grow, but the income line doesn't grow that much. You only have non-interest revenue growing for the banks. And that means not a great deal of increase in value, and that could mean a further sideways movement in the price for our banks.
Let's look at the smaller banks, though, and the unsecured lending space. Are there signs that we could be reaching a bubble?
There are signs. The question is, how big could a bubble inflate before it pops? And if you listen to the management teams of the likes of African Bank and Capitec, it could be a while still. But at the moment, they are extending loans that they call consolidation loans, which means that there is a big segment of our market which is borrowing to pay off other loans. And as soon as that happens, it's the first signs that there could be stress. Also, if you look at the last results presentation of African Bank, they normally show their vintages, which is their bad debt experience per timing of when loans were advanced. And it seems like the latest loans that were extended more recently are showing worse experience of bad debts than the older loans, which is not a great indicator.
Definitely a red flag there. Are they becoming a little bit more prudent with regards to lending out, or not yet?
Not yet. And not only on the lending side are they not that prudent, or let's say they are lending money relatively easily, but also if you look at their financial statements and the type of provisions they put through for bad debts, the likes of African Bank has seen a good experience in terms of recovering some of bad debts that were previously written off. And that has led them to actually extend the term over which they write off their bad loans, which is in that sense better for the income statement, but also less prudent maybe, which is another red flag to let investors know that there's a lot of optimism in the sector at the moment.
I mean, interesting that the regulator would allow them to get away with this, would not be kind of, wanting to go in and tighten regulation, given all that happened in the US. I mean, really, are we repeating what's going on there, or is that a little bit of a overdramatic statement?
Hopefully not as bad as that, because I think firstly the loans that are advanced in an unsecured market are very smaller than against a house. So unsecured lending isn't as aligned to the collateral for the loan. And then secondly, we did have the NCA, which in a certain sense did tighten the market, but maybe there needs to be more regulations, not only on the lending side alone, but the other products around the lending, like the credit life insurance, which for these big banks are a big generator of income when they sell these short-term insurance products bundled together with a loan to the lower end of the market.
So as we go into 2012, of course, we've got broader financials, the likes of JSE and Coronation, that have been slightly outperforming the rest of financials. What are your favorite financial stocks? Where would you be aligning your portfolio if you were wanting to get exposure either to the banks, where you say we're going to see muted growth in 2012, or outside of that in the general financial space?
I like that sector outside of the banks in financials more than the banks. So as you mentioned, the likes of Coronation, the asset manager, still outperforming their peers and therefore earning performance fees, which has boosted their share price performance. The likes of the JSE, a lot of good things happening. They just announced a point of presence overseas for international investors to trade in our local market.
And that also significant, as you say, for volumes here, and increasing the platform that South Africa has, and South African equities has on the global scene, because of course, all the concerns around the developed world is meaning that international asset managers are looking to South Africa, looking to Africa to broaden their risk.
Definitely, and with ease of trading, it means that if it's easier to trade in South Africa versus other emerging markets, investors will go for that. And that boost of volume of trading on the JSE will be a big benefit for them. They'll also move their Millennium IT system back to Johannesburg and locate it from here in their data center. They'll offer co-location to high-frequency traders. They're going to change the BDA system and upgrade that for better efficiencies. So of all the stocks in the financial sector, the JSE would be one of those that are high on my stock picking list.
So JSE and Coronation?
Yes, I would say that. Those I would put in my stocking for Christmas this year.
Great. Thanks very much for your time today.